everyone. So in the next couple videos you're going to watch, it's all basically a little collection of the videos that I've done on my TikTok page about taxes. So one day in the TikTok video, I mentioned that I have to pay taxes. And the amount of responses that I got from people saying like, whoa, hold up. We have to pay taxes on our stock trades was horrifying. Like, of course you have to pay taxes on your stock trades. It's income, you know, and they just didn't get it. There were some, well, how do I do it? I got some people saying, well, I'm just not going to tell them. I'm just not going to tell them that I made those. Well, it's, you know, that's not how it works, right? Like if you have an Ameritrade account or a Webull account or a Robinhood account or whatever you have, at the end of the year, you're getting a 1099 form in the mail and you're going to need to either use TurboTax or go to H&R Block or, you know, have an actual accountant go through and do your taxes for you or explain to you how to do them. It's not just like free money, you know, that you're not going to have to pay for. Of course you're going to have to pay taxes on it. So that was kind of illuminating. And so I want to put this video up here on YouTube for all the new traders out there and for anyone else. Look, I'm not an accountant. I don't understand taxes either. You know, we spend all this time in high school on periodic table and on apps like abstract, like random math equations that we'll never use as an adult. But I pay taxes all the time. I pay estimated taxes. I pay property taxes. I pay annual taxes to the Fed and to the local DC government where I live. There's taxes for everything. But yet it's not something that we teach in school. You know, we have a trimester or a semester on the periodic table, which is fine. I'm not saying we don't need to learn about science. We obviously in this country, especially now in the time of coronavirus, need to be listening to our scientists. But we're spending all this time on something that we will never really use, and then we're spending no time on something that we use all the time. Why? Why are we not putting an emphasis on financial literacy and financial planning? Why don't we have a tax class in high school? I don't understand it. We're so ill prepared. The only rational conclusion that I can come up with is they don't want us to be financially literate. All right? Because it makes us consumers for life. We're not financially literate. We don't understand the tax code. We don't understand how any of it works. We're in debt up to our eyeballs. It benefits capitalism. It benefits consumerism when we are kept financially illiterate. So, please like and subscribe to this channel if you haven't. However, if you have real serious questions about taxes, I am not the guy to ask. I'm just putting these videos up to put a spotlight on the fact that we really don't know much about taxes in this country. We don't understand how the tax code works. The point is, I don't understand a lot about taxes. If you have real questions about them, you're better off talking to an actual accountant and someone who can explain it and help you and give you a better understanding of what all this stuff is and why we need it and why it's important to know it. So watch the videos that follow. Thanks and have a good day. Yep, you're gonna have to pay taxes. The only way you wouldn't have to pay taxes is if you had an IRA, which is tax-free till retirement, or you didn't sell any stock. You just bought something and held it. You wouldn't have to pay taxes. You only have to pay taxes when you sell a position or you get a dividend. Even if you reinvest that dividend back into stock, you still have to pay taxes on it because it counts as income, which is kind of bullshit, but that's the way it goes. Now, if you hold your position for under a year, you're going to pay something called short-term capital gains taxes. That means whatever tax bracket you fall into is how much you're going to owe on every single trade you make. However, if you hold the stock for over a year, you're going to pay something called long-term capital gains taxes, which will be a little less than the short-term ones. This is done, of course, to encourage people to become investors for the long term. At the end of the year, you're going to get a statement in the mail from every loss, every gain, and every dividend, and you're going to have to file them. But if you have losses, you can use those to offset your gains, which brings your tax rate down. So the amount of questions that I got yesterday on my tax posts was astonishing, like astonishing. In a good way, kind of, but also it illustrates just how horrible our high school education system is in this country. Nobody knows dick about taxes, myself included. How did this happen? I can tell you what mitochondria is, but I don't know anything about taxes. I mean, the comments that I got yesterday, I'm grateful for, and people are going to learn, myself included, but man, some of the questions were like, wait a minute, I have to pay taxes on my day trades? And then they ranged to things like, I'm just not going to tell the government and we'll see what happens. Like, but you're going to get forms in the mail from Ameritrade or Webull or Robinhood. They're going to come after you. Good news is there are a lot of accountants joining this little group here. Hey, thanks for your question. You still have to pay taxes no matter what. The more you make, obviously, the more you will pay. But your short-term capital gain tax rate is whatever tax bracket you are in. So let's take a look. If you Google short-term capital gains tax and then click on Google Images, it'll take you to an image that looks like this. So you can see your income, your short-term capital gain tax rate, or your long-term. That's anything over a year. This is what you would pay. So you pay 0% if you make under $38,600 if you hold it for over a year. Short-term though, it's a little bit of a different story. If you're making over 500 grand, you're paying 30% in taxes if you sell it within a year, or 20% if you wait over the year. This is a very cool graphic that can help explain all of this to everyone. That guy is a million, billion, trillion % correct. Trading stocks is not like when you were 16 and you would walk your neighbor's dog for 10 bucks. The IRS isn't like your neighbor. You know, you can't just slip a $10 bill in your pocket and forget about it. Nobody has to know. They're going to do everything they can. You're working with banks and brokerage houses. They're going to do everything they can to make sure that you're not committing fraud. You can't just say, well, I'm just not going to pay and we'll see what happens. They mail you forms. They'll come after you. It's the IRS. It's not your neighbor. You're not dog walking for some side cash. Be careful. If you don't think you're going to have to pay taxes or you're just going to avoid it and pretend and see what happens, oh, it got lost in the mail, good luck. So last week I did a video on Tesla and Apple and their split. Some people on TikTok are advocating or suggesting that you sell your stock in Tesla and Apple and buy it back after the split, hopefully lower. If you haven't seen the video, go find it. It's just a couple videos back. I want to caution you out there that that is a big what if. These markets are very volatile lately and very unpredictable. Just because in the past stocks that have split have gone and done certain things doesn't mean they will today, especially nowadays, given all the new traders who are flooding into stuff like Robinhood and buying tons of shares in companies. But most importantly, if you're long these companies, in other words, you're investing for the long term, if you sell before the split just with the intention of buying it back at a cheaper price, you will be paying short-term capital gains taxes. Hit pause and study this chart. Just something to consider. I don't know. I am not an accountant, so I've just been doing a little Googling trying to get an answer for you, and it gets pretty murky. It gets pretty complicated. Is it an ordinary dividend or is it a qualified dividend? If it's an ordinary dividend, it's taxed at one tax rate. If it's qualified, it's taxed at a lower tax rate. So which is it? I'm just going to read this to you. Ordinary dividends are the most common type of distribution from a corporation or mutual fund, according to the IRS. The rationale is that they're paid out of earnings and are thus ordinary income to the individual taxpayer. That's you, not capital gains. It also says, for 2019, you will not need to pay any taxes on qualified dividends as long as you have $38,600 or less of ordinary income. What does all that mean? Fuck if I know. Talk to an accountant.